All right, good morning, everyone. Thank you for all your participation on this one. So today we're going to do analysis on, as usual, on our instruments, VIX and the boom and crash. Okay, I want you to always follow us. Okay, so that you can be able to uh, get the information sometime. Okay, so you can also click on the like and I like button, okay, and also share. Then also do click on the subscribe button to subscribe so that anytime I drop a record a video, you can be able to get it as fast as possible. Okay, so don't forget to click on the like button and also click on the share button and share to your friends. Okay, those that are also trading, because we need to grow our community. All right, and also subscribe so that you can always get the videos information anytime I drop it as soon as possible. Okay. All right. So let's start from crash 300. So this is the crash 200 on 15 minutes time frame. So you need to understand how I do the analysis. Okay. I don't just start from daily or go down. So I start also from daily, but when we are trading boom and crash, we bring it to the level where others can also be able to participate and also trade to make profit, which means we analyze daily, analyze 4 hours, and bring it down to 15 minutes. Okay, 15 minutes will help us to see the structure earlier and also enter at a good time. To an extent, we can also normally, for entering purposes, can also enter from the smaller time frame, okay, which is a 1 minute also, because each and every one of them goes with their structures and waves. Okay, so what is our foundation and basic of our analysis is a wave structure. Okay, and also the engulfing candle for getting to the zones in support and resistance zone. Okay, so and another thing we also use is, which is like our no do stuff, our you can't do without it, that is the counter trend line. The counter trend line we can't do without the counter trend line. Also, we look for Fibonacci retracement levels also. So there are about 6 strategies we bring together, okay, that helps us to confirm if this market is strong or if the market is going to go to our direction strongly or not. So it helps us to have a stronger bias, okay, towards the market. All right, so let's check on this crash at 300. Obviously, we know that on a bigger time frame, that crash 300 has been correcting for a very long time. If you can see it very well here, you see that this is corrective structure, okay? This is a corrective structure. For this impossible, all these things are corrective structure. So we are looking forward to see this market push up, okay? Now, after this, I thought that this market will do what I called another down impulsive wave after this corrective wave. So we discovered that what it did here might actually be an extension or a starting of the new wave to go up, okay? But nevertheless, we need to watch it out to see what the market is actually doing, right? So, can the market still go down? Possible. If you want, it can, okay, but from what we are seeing here, I think that the markets need to do corrective structure for another up at this moment, because what I just see here is a fast down and a fast up, fast down and a fast up. So anytime you see something like that, you will need to see a corrective structure for another up. Okay, so that is what normally happens in the market. So anytime market does after this wave, we have a fast down and another fast up, breaking that high. It means that it needs to do a corrective structure for another up. Okay, it has to take another. So we are waiting to see this corrective structure. Maybe from here, or maybe we go up a little before that significant corrective structure for another up, okay? But this is a crash 300, okay? Normally we go for the spike into the area. So if it's crash 300, we expect to see spike. We will be trading down one, okay, down movement. So which means that if this market is going up, we won't be getting much spike. The spike that will be coming will be corrective structures, okay? So those corrective structures are our area of interest. So what we do is for this market, for us to conclude that it's going to do a corrective structure, we need to see a zone here or an engulfing candle indicating to to us that this market is going to return down. Okay, since we have not seen a significant structure here, so what do? We have to allow this market to make an engulfing candle. If this market engulf this candle, giving us a bearish engulfing and a return inside that zone, we can expect more down. So that down will be the down we can take for an extent, maybe to this area, then market will continue going up. Okay, that is what we can expect to see. Okay, then as the market is going up, we can go back to trace at this area the possible engulfing zone that the market have not tested before. So we can see here on the 15 minutes that this area have been tested before. Okay, this area. So we don't know about this area, but let's put it in 30 minutes to see if on 30 minutes it has tested before. So we'll go for 30 minutes to check the engulfing area zone. So now, on 30 minutes, we can see very clear that there is no engulfing here, but there is one here. There is an engulfing angle here that have not been tested before. Okay, so let me spot that zone. This is the height of this, and this is the low of the zone. So this is the height. So let me make the line. Touch there well. Okay, so now this is the zone. So I'm going to drag it to our fusion or to our present. Okay, so this is our present. So obviously, as the market is going up, where can I see a strong down, a strong significant down at this level? So once the market, after everything, enter inside this zone, I am expected to see a strong reversal with 3 waves, okay? A corrective structure with 3 waves. Once I get it, I option out. So if I get a 3 wave, what do I mean? If this market push up to this level, I will be expecting a 3 wave structure, which can go like this, okay? Or it can go like this as a running flat pattern, okay? Or it can do expanding flats before it goes up, okay? So I will be expecting a corrective structure. So after the corrective structure, I will get out because the market needs to do what? Needs to go up again. So what do I need to do? I need to be careful why I am taking the market down. What do I expect? The first down that needs to come, if I'm entering it, if we spike the first down, I need to go to 1 minute time frame or 1 minute time frame, especially 1 minute time frame, to check this first down structure. Once it gives you 3 wave structure and is ticking up and break that structure, you know that you need to leave that the market because it's reversing down to do the second wave. So after that, after the second wave, you monitor the second wave. As soon as the second wave gets to the area and give you sign for another down, you enter it and enter the last wave, because after that one, the market need to push up very, very well. So that is what we'll be expecting at this area. So what do we do? What do? We wait patiently for the market to get to this area. Okay. After that, we'll start taking our trade down. But on the contrary, at any level here, before we get to that zone, if you give us an engulfing candle, we'll test on it, we'll go down with it. Okay. But that is not much. It's just a corrective or retracement spike coming up because it will continue go up. All right. That is for crash 300. Okay, so let's look at a crash 500. Crash 500 is doing well. Okay, yesterday we discussed about this down, okay? That this down is the first impulse against the trend. We saw it somewhere here, okay? We draw our counter-trend line yesterday. I believe you can remember what we did yesterday. So we draw our counter-trend line this place and say that this is the first wave against the trend, that we are waiting for the corrective structure for another down. Okay, so obviously the corrective structure came as an expanding flat pattern, okay? Came as an expanding flat pattern. And we say yesterday that if this market is coming up, that we're expecting to see another down from a particular area, which is either at this zone, we pointed this zone, we pointed this zone, and we pointed this zone. So we say 1, 2, 3, that the market is going to reverse from any of them. It got to this place, if you can see it very well, it got rejection and go down a little. Then you use this zone to reverse. If you put this zone, you will see that this is the area it reversed. But before it reversed, it did something remarkable. Okay, you need to check what it did. It gave us an engulfing candle. Okay, and it retest on it, reduce another engulfing candle and start pushing down. So this is the engulfing candle. That is why I normally tell you, if you check that crash 300. I mentioned something like that. If you give us engulfing candle and we test on it, you enter for you to do it, for you to trade, okay? Go down. So now this is what I mean. The market created what? It created a zone here and a reverse inside it. So anytime you are entering a trade with an engulfing candle, don't just put your stop loss at that point. Give at least 5 pips above it to place your stop loss, 5 pips above it to place your stop. Give a gap because market normally do stop one, just like it did here. So it did stop one. So you normally give a gap. Don't just put it on the line because you will not get it. Okay, put a space where you're putting it so that it will not just hit your stop loss and reverse back. Okay, so that is what the market did here. It retested at that zone. Boom, it started pushing down, and this is where we find it because obviously it was the next wave. Okay, the second impulsive structure. So what we see here is that the market is now completing its impulsive structure. So what next? At this moment, it's still going down. So what I advise is if you can see on a smaller time frame a structure. So let me put it on 1 minute. If I see a structure and it breaks that structure, I will sell. If I see a structure and it breaks the structure, I will sell. So let's look at this. What are we seeing here? Okay, so I believe that after this, the market might go up again. If this market push up again, it will give me a structure on 1 minute, okay? I will use that structure. Once it breaks it, I will start selling because the market is still on a downtrend. So more spike down has to be coming. More spike is expected. So after this, it can still spike and continue spiking more down, okay? Because it is on a downward. Okay, if I did not get this as I expected, okay? The market decided to push up, obviously no problem, but I have to, the best place for me to target a reversal from it is at this place. In 15 minutes time frame, you will see an engulfing candle here that the market has not tested before. Okay, it forgot to test here before. Okay, and it started pushing down. So if you find it, obviously after sticking to get to this place, that would be a nice place for you to sell again. And if you get that, it can move more down and you will make a good profit from it today. Okay. All right. So let me look at let's look at a crash 1000. All right. So crash 1000 is on a down move. Okay. It's on a down move. So hopefully we are expecting it to reverse. Okay. We'll take a look at it. Take a look at the guy. The guy is very sharp. So if you look at it, looking at this present space where it is now, I believe that is the first impulse against the trend. This is the second wave. Okay, so we might expect more up. Okay, so the third wave, which is the second impulse, needed to come. But from this, remember what we normally do. If you have a first impulse, for example, and the second impulse is coming down like this. Okay, second impulse is coming down like this. You have to be careful because it might break low. If you break this low, this reverse neckline low, you break it, that means the market wants to form a running flat because the third impulse, which the third wave, which is the second impulse, might stop somewhere here and continue down, which gives you a running flat pattern for more down. Or it can do what? It can go up to create an expanding flat pattern. Okay, so obviously we see this market giving us a sign that it wants to form, it wants to break this low because after this, that what we see a corrective structure. This is a shopping move. This is a fast one down. So it start moving a shopping move. Then obviously this market wants to go down again. All right, so for me, if you have mind, if you believe that this market will go down, or if you want to take a risk, okay, that is calculating. So it is accurate or good if you enter and put your stop loss above here or above here, then expect another spike to come. But if you cannot do that, please allow the market to finish the third wave and start pushing down because we are expecting another down to come. So that down will finally break this low. And after that down, we'll be expecting a reversal. So that reversal will be the what? Will be the second impulse, which is the third wave. So if that reversal starts coming, there are 3 areas, 1, 2, 3, that the market has to reverse and push down again. And if you want to reverse at this area, okay, for example, if you have this, that reversal will be expecting will be a long one, okay, a very big one, okay. So what do we wait for? It's either you enter here, put your stop loss above here and wait for and follow the last throwdown and you get out from it because it's the last throwdown. You get out from it immediately. Then if you see the counter trend after down, if you break this counter trend line, you can enter it for buy and tick up. Once you are ticking up and you get to any of this level, just get out of it, take your profit because a down might be occurring. So let's look at the zones that we're expecting the market to come. But let me finish this down first. Let's say the down happens like this, okay? Let's say we have the down like this, okay? So if you have the down like this should be your counter trend line, okay? Once you see your counter trend line, you break your counter trend line up, you can now tick up to this level. So let's begin to point this down, these zones. Let me identify the zones that we need to target a spike from it, okay? Our reversal area. This is the first one. It is the first one. This is the engulfing candle, the first one. That is our first target. If market refuses to do what it's supposed to do, okay, it will break it and go to the second one. Normally, you normally use the second one. You know, this first one, just like we saw on Crash 500, just how we saw here. Okay, that we saw here. You didn't use this first one, you used the second one, which is in the middle. Okay, so obviously, he might use this one, or they might use the second one. So it's just for you to take the risk, and the risk is very small. Okay, the risk is very small, so you cannot afford to lose the opportunity. So take it when you get here. But if you break it, then another place of opportunity for you to take the risk is here. Okay, take another one here. This one risk is a little bit bigger. Okay, then after this one, the last place that the market need to reverse is at this level. Okay, so once it meets this wave, then we know that it's forming expanding flat pattern. That expanding flat pattern will look for up exactly at this level. For us to capture it at this level, and the market will start going down, or even at this level. But I believe that it needs to give us a running flat or reverse at any of this level, then we show where it's down. Okay, so that is our expectation on crash 1000. So don't miss out on this. Watch it very well, pay attention to it, and take advantage of these waves. Okay, all right. So remember that you need to subscribe. Okay, click on the subscribe button. Okay, when you go down on our look down on our channel, so you do the click on subscribe button, then you can also like and also comment or share. Also share so that our community will grow. Okay, share so that so many people will be enjoying these services. Okay, thank you very much. So just look at boom 300. It is boom 300. Okay, so we see that the market is it pushed up, and this is the first impulsive wave against the trend. So this market, obviously, we're expecting it to grow, come down. Okay, for this down, we're expecting another down. So obviously, more down wave is expected. So if you go that way, depending on how fast it could, if you go down, okay, if you can trade the down, fine. If you cannot, so but I believe that this is the zone that it must not cross. Okay, if it really wants to go down, if this market must go down, it must not cross this zone. Okay, so even if you pushed up to get to this area, I expect it not to cross this zone to go down if it really wants to do a regular flat pattern as a corrective structure. But if it breaks it, that means it wants to form a running flat because it will still come down, but it may not come down the way it's supposed to. Okay, so let's expect the market that at this level is still go down. And if you get to this place, that is three-wave structure, then you cross your counter trend line. When you break it, just enter the tick and tick it down at least to this level. Okay, this level. Then that is tick. Okay, so but we expect a boom, a spike to come at this level or below this or at this area. But if we clear all these zones, that means we're expecting it somewhere here that the market will spike. But let's first of all take this opportunity to slow down first of all. So if we see the structure after playing out well, okay, let's say the market did something like this, okay, then we saw that this market wants to go up. What will confirm that up move is when the market do what? Break the counter trend line. After testing, then reversing and break this, then more up will be expected. But apart from that, the market may choose to go more down, heavily more down. What I mean down, I mean down. This has been going up for a very long time. I put this area from daily time frame is an engulfing candle zone that is a strong resistance on daily time frame. So if this market happens to break this, that means the last place is going to land is here. After this place, we will be expecting a bigger down. We'll be expecting a bigger down move. Okay, we're expecting a bigger down move. This down move can take weeks. Okay, can take weeks. We'll be expecting a bigger down move to showcase. That down move can be very, very big, heavy one, I'm telling you. Okay, so that is what we're expecting. Okay, that's what we're expecting. But if the market refuses to go up to that area, the market can choose to go down, to drop very well and give us a significant corrective structure before going back up. Okay, that is for BOOM 300. All right, so let's look at BOOM 500. So presently, we can see that BOOM 500 is on a corrective wave that needs to go up. Okay, all right. So we are taking it on ourselves. If you look at it very well, you see that this is an impulsive wave from this current move. Okay, from this current move. So we see that this is the first wave. Okay, this is the first wave. So already I am on it because this engulfing candle is my evidence. Okay, it's my evidence. So immediately I saw this three wave, 1, 2, it uses three wave landing on this zone. You know that the market is good to go. So it's going to give us another leg for this up. It's going to give us another up. Okay, at least to this level. Once I get it to this level, wow, I will take a quick out profit on that. Okay, even if you want to go more up, I need to see a corrective structure for me to continue going up with it. Okay, but here I'll be okay. Once I see it landing on this, I'll take my profit there. Okay, only this one alone must have made someone's day. Okay, you know, on a boom and crash or VIX, what we do is a 5% of our account on daily basis. Okay, it's okay. 5% minimum of 5% is okay. So whatever you are doing, and you make up to 5% daily, you are good, okay? You are good. If you can do it consistently, you will grow your account, okay? All right, so that is for BOOM 500. Let's look at BOOM 1000. For 1000, take a very big short this morning. It was pow. Okay, so yesterday, the thing annoyed me yesterday. The BOOM 1000 annoyed me because I waited for this. I waited for it, but it got me annoyed. But I said, well, who am I to get that angle? So the market didn't really do well for me. What I was expecting yesterday, it was a very big blow. It was a very big blow for me. Yesterday, I was expecting it. We saw the market up, congealing small here. So we have a little places that we expect the market to reverse here, or below here. So market was, after said and downs and a lot of things, he used this zone to start pushing up. So when I saw this market pushed up, I said, wow, that I have to target an entry. So I look at this area and I check my 30 minutes time frame. It was a wonderful zone. So I spotted this area and I saw the market coming down. I said, okay, let me allow this market just a little touch. Let it touch this area. I will grab it like mad. So I put my pending order here, hoping that it will touch. The migrated stopper, this market failed to touch. They started pushing up. I thought that the up was a joke, like a joke. It keep pushing up, like seriously. It was so annoying, but I thank God it's market that I miss. I didn't lose. Okay, so looking at it for opportunity to enter, I couldn't get much here, though it gives opportunity here. After this first offer, I could have taken this opportunity. That is why we need to be very careful and pay attention, be focused. Whatever you are doing, be focused, because this, if I was focused with it seriously, this will be my second option to ride this market up. Okay, since I couldn't cash it here, this will be the second place to cash it. I would have been in the market for a very good time. And you see, ever since then, another place is give opportunity to buy this place and it push up, another place is here, and it pushed up. This is a wonderful ride, okay? It's a very good line. Obviously, now I cannot enter it by. I need to wait for the market to finish what it's doing and start coming down, okay? So for 1,000, I just have to pack for it. Let me see another structure before I will start considering it, okay? Then VIX 10, volatility 10, which is a shopping move coming up. Okay, expected the market to, if it wants to reverse, let him reverse at a particular area. But the market needs to do an impulsive move. After breaking this, it retested like this and start pushing. Okay, so what is the opportunity for us to buy this market? Look at the zone, look at the zone, look at the zone. There is no zone here that he used to reverse, but he created one before he started pushing up. That's what I always tell us. Let's pay attention anytime the market wants to reverse. If you did not see anything, any zone before, watch that present one. He will create another one and use it to go. So this is one he created. He created this engulfing and bullish engulfing and immediately retested on it and bounced up. And that hop is took that up for a very long ride. And you can see since that time, he keep on going up, going up, going up, going up, going up, pushing up. Because if you bring it down a little, let's zoom it down a little, discover that he needed to give us for this up, we get corrective structure, then another push up. Okay, so at this level, we are expecting a reversal. Okay, so we are expecting a reversal. So we have to calm down because this shopping move can go for a long ride because this is a shopping move. I don't like to see some structures like this, all these small shopping structures. You can go for a long time. So you have to be careful on it. So just know that if we take you out, it's okay. You target another one because this shopping move is very funny. Okay. So the market can choose to break this high and then go down. Okay, but you can choose not to break it and go down and start going down. Okay. But nevertheless, we put our stop, our counter trend line like this. So once you break it, we'll give it a trial for a down push. Okay. And remember, we also have to understand that this is a volatility time. Okay, volatility time. It's not about spiking and it's not about ticking. Okay, it's normal move. It's normal move. Okay, so that is what I'm expecting on volatility time. If you break this low, I will target a sell. But if you went high, I will try another counter trend line with this and this, connecting it. If you break it, then I'll target that down. Okay. All right, volatility 25, very nice one. It gave us a running, expanding flat pattern. It started from here. This low here, this market, very funny market. What this market did to me, very funny market. This market for this up, okay. For this up, I've been expecting to see this up. Very funny, very funny, very funny. This structure. Okay, so I said it the other time that for this up, we're expecting another up. Okay, so this up was what we're expecting. Okay, so you need to break this high. Obviously, you need to break this high. Then, if you break this high, you can see that in a formula, you will be seeing what we call small fan swap. Okay, you can see small fan swap. This is a low. Okay, this is a low. Yeah, according to the small fan swap rule, this is a low. This is a lower low. This is a lower low. Okay, and this is a higher low. So what do you expect? If the market break this, why I want to draw this, because I want to give us the target of this high that's supposed to come. So if you have this high, okay, have this down, this is the low. Okay, so this market has broken this counter trend line, this low and this high are connected together, has broken it. Okay, so I know why I draw this. So on wave structure, you can't draw this. This is not correct. Okay, on wave structure, this is not correct. But on small fan swap, this is correct. Okay, so if you draw this wave, we see that the market gives a low, a lower low, and a higher low. So on this, we're expecting we can drag this limit, put it on this low. So to get our target. So what does it mean? It means that this up that's coming need to get to this place. So these are our targets. Okay. So we need to see this market here. So these are target, final target for this small fan swap move. Okay. So now with this, you can know that this up will still go more up. So the highest you can see is a corrective structure. It will continue going up. Okay, so now look at what the market did. Look at what the market did. If you can see it very well, let me zoom. So this is what the market did. Yesterday I was expecting that up should start from here. The market failed because it gave me an engulfing candle. Came down and retested on it, pushed up. I was very confident. Wow, this market will go up. This market will go up. Blah 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 blah. The market failed. This is my counter trend line. Okay, I use this counter trend line. The market failed. It didn't break the high, and it came down here and still go below. And this was the last low. Take clear this liquidity. Yeah, boom, pushed up. It started pushing up. Obviously, it did not give any sign from here. But the place he gave another opportunity for anybody who wants to take it is at this level. Okay, is at this level. It gives a corrective structure, and this corrective structure obviously is I think is regular flat pattern because it did not break this high. Okay, so after this, it push another up, then give us an expanding flat pattern. With that, it push up again. So this was a very nice move. Wonderful. Can you just spot this nice move? Wave is powerful. See, wave structure is powerful. Who no go no unless you tell them. Okay, so wave is powerful. For if you want to learn more about this, just join us and then identify yourself and the willingness to learn. We put you through and you see how to make money trading the forex market and also trading the boom and crash, all fixed. Okay, all right, so the market is still pushing up. So the next thing we can expect is a corrective structure for another up move. Okay, so watch it very closely because it's coming. Okay, it's coming. All right, so volatility 50, volatility 50, volatility 50. Okay, so look at this structure. We have a breaking of a counter trend line at this level. Okay, we have with this the what? This is the first wave with three-wave structure. The first wave against the trend. Boom. Wow. Okay, so the market starts ranging. The worst case scenario, the market will push up again to clear this high. Immediately clear this high. Just make sure that you are in the market because you're going to push down. Okay. So if we use our Fibonacci retracement level, we can see that the market has touched level 38. Obviously, it has touched level 50. So if you clear this high, obviously you will go to touch level 61. Okay, so the moment you touch there, just make sure that you're in the trade, in the market, because you're gonna get a heavy down. Okay, and if you're not sure if the market will go to touch there, just personally, you already are on the trade. Just make sure you enter the trade, put your stop loss above this. This is your stop loss area above this area. Then we're expecting to get the second down. Okay, that is what we're expecting. We need to get the second down. Okay, you never can tell how far this down can go. Okay, so make sure you do not mix it. Okay, then if you want to be sure, you can wait for the market to break this counter trend line. If you want to be sure, just give yourself time, wait for it to break this counter trend line, then you start riding with it. So if you enter below here, you put your stop loss above here, then you down go the second down. So we that are already on it, we are cool. So what do? If the market break this, we enter another one, put a stop loss below here. That is another opportunity to sell. Okay, so that is another target. This is one of the market or the trade of the day. So don't mix it because profit is coming. Okay. Lastly, let's look at volatility 100. Volatility 100. Let's look at volatility 100. All right. So this is volatility 100, and obviously we are expecting the market to continue pushing up because the structure has been broken. Obviously, I wanted this market to go down to clear this low for the last time before you go up. But most times the market do something like this, okay? Market take you on a way, pushed up, do corrective structure, let's take it up again. So these are three waves, these guys, okay? If I start analyzing this, you will now understand more. So if you want more class, if you want deep knowledge, so join us and you will get what we are learning, okay? So this is what I mean. Is a three-wave structure in these guys, okay? So now we can see that the market has finally broken this counter trend line. So let's look at it and see what we're expecting. So the structure looked very nice, okay, on this counter trend line. It didn't just break this down one, okay, it also broke this high. Put it here. Let's take it here. Okay, obviously it broke this. So this is the first impulse against the trend. This is the first impulse against the trend. So after the as this down is coming on, just if you fail to trade this, just know that this opportunity again is coming on this area. So just monitor to see the corrective structure. Once you get a corrective structure at this area, okay, corrective structure, whether running flat or regular flat or expanding flat, whatsoever, you need to see a corrective structure, then another up will come. Okay, so we're expecting the second wave. So if you fail to enjoy this first wave, don't fail to enjoy the second wave, because this is the opportunity we are entering on this second wave. This first wave could, okay, and this is the second wave of this first wave, third wave, third wave, okay. So now monitoring this, you can see that market can do something like this and even do another corrective structure, okay, and push another up again. So don't waste to miss this. This is going to be powerful. Don't wait to miss this, okay? Don't miss it. Don't miss it. Don't miss it. Don't miss it. Okay. All right. So let's watch out and see what this market can do. Okay. So we finally get this three wave. Obviously, the market might push more down. Okay. The rest of the market might decide to go more down. Okay. All right. So that is what we have this morning. Make sure you watch the video and make sure you trade to make good profits today, okay? Always remember what to do. Share it, okay? Comment on it. If you're enjoying what I'm doing, please comment on it, okay? And share. Also, click on the like button and subscribe so that anytime I drop something like this, you will get. Okay, so we do our analysis from Monday to Saturday. We don't do on Sunday, okay? Our daily analysis on boom and crash comes every morning, Monday till Saturday, okay? So you can be able to see what you can use to take a position and make profits from the market, all right? Thank you very much and have a wonderful day.